Hey everybody, this is Jim at SP500chart.com. It's about 5 o'clock on June 2nd, 2014. Before we take a look at the chart, I just want to remind you as always that the website and this video are for educational purposes only. Nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional and just a guy who draws lines on charts. So let's take a look. We're starting out here on a 10-minute chart, and you can see I've added a couple of new little trend lines here that represent a channel that has established itself once we got over 1900, really with our first close over 1900, I believe. I don't think we closed over. Let me double check. Yeah, I think we did back in the middle of May, but just by a hair. So let's call it, since we've really solidified a move over 1900. This marks now the 5th day in a row that we have been over 1900. We are also over this neckline that I mentioned to you a while back. This neckline would be support if we come back to retest it. In addition to that neckline, over the weekly review, I mentioned that we have a line right here, this green line, that is drawn from the bottom of the inverted head of our inverted head and shoulders pattern and the inverted right shoulder. This line right here should also be considered support if and when it gets tested. We are now clearly, technically, significantly above this neckline. And hey, finally, after what, about 3 months of feeling like we were just directionless and pretty much just in this area of turbulence where, who knows? Now we should have an idea about what the future holds. Now, for the short term, I would kind of still expect this green line to put up a fight here. And you can see we're just kind of inching up closer and closer to it. And it'll be really interesting to see what transpires if and when we make a concerted effort to get over this line, because it is a rising trend line. It is not a descending trend line. This is not a line that you would say to yourself, oh, I expect that to break. I don't. And here's the deal. I really kind of don't want it to break, because if it breaks, then there is a chance that we could be setting up something of a call it a blow-off top. In other words, if we break, just like when you break descending support in a bearish move, the break of that descending line is often indicative of capitulation by longs. When you have a rising resistance line, breaking that to the upside is often a sign of capitulation by shorts. It can also be a sign of longs chasing stocks. So I kind of don't want that to happen. I really would sort of like to see us, maybe have a little bit more positive movement tomorrow, but then come back and test support. So here's the deal. I'm looking to this still for resistance. I'm looking to this for support, and I'm looking to this for support. So that means we are now closer to resistance than we are to support, meaning I would expect the next short-term move to be downward. Look Look back here in April. We came off the lows of the 15th and 16th, made a nice move up, then gave up about half of that, and then went sideways for a while. It would not bother me one bit if we saw the markets sell off a bit, come back to the low 1900s, maybe even go sideways for a bit, and then take off again for what would be a leg up at that point that should be something attacking the 1940s. That'd be fine. So if we do start to sell off a little bit this week, I would look for support around 1904, 1905, or if it were to happen a little bit later, or in the chance that 1904 were to not hold, then I would look to this green rising support line right here to be where we get a good bounce. If you look at, again, the trading that we've seen over the past 5 days, it's fairly well defined in this little channel. Not perfect. The bottoms line up very nicely. The tops, not as much. And that's indicative of a bullish scenario. In bull markets, the bottoms tend to line up nicely. The tops can run ragged. In bear markets, the tops of the descending channel tend to line up nicely, and the bottoms tend to run a little ragged. So we're running just a little ragged at the top here. That doesn't bother me. So guys, that's about all I can say. Day 5 over 1900. The market now has proven to me that it has business being here. The question will be, when we get a little pullback, how far, how deep, and when we get that pullback, it'll be interesting to see where we get the bounce, because that will teach us something. I think that'll be a nice feature to have on the chart. So maybe at some point this week we end up with another data point that helps us define a little bit larger picture than just what we were seeing with this very narrow channel that was between these two lines right here. You remember I said this is just going up too fast. This is going to break, and when it breaks, then I was expecting a more sideways move than a move up. Instead, we break and then we just kind of still are moving upwards. So guys, there's your video for June 2nd, 2014. I would expect, again, green line resistance, purple line support, lower green line support, and the thing that will probably give us a hint as to when we're getting ready to test support will be when this lower channel line breaks that I've highlighted right here. So again, thanks for watching. Thanks for taking time out of your day, and thank you so much for your support.